Hello, this is Dr. Bhushan Shanbhag. Welcome back. Today we are going to see how we can use IndiaVIX related calculation for writing the options. So net we will be selling the option. Preferable when IndiaVIX is below 20. Can be done when IndiaVIX is above 20 but the risk is much more. So to be minimized when position such the kind of positions you should minimize. If IndiaVIX is above 25 then don't follow these strategies. Sell call option above the limit price and put option below the limit price, what we call as the short strangle. You know you have a upper limit, you have a lower limit. So slightly above the upper limit you sell OTM call, slightly below the lower limit you sell OTM put option. That uh, will keep on decaying in the time value, and as long as Nifty remains between the upper and lower limits, you're going to make money. Or even if it is marginally outside, still you will make money. Only if it goes beyond, much beyond, then you will have to exit the position. Losses will be very small as long as the limits are not crossed significantly by Nifty. Credit spread you can do. Okay, when Nifty reaches near the upper limit, you sell the middle point, middle of the range, call limit, and buy another call which is slightly OTM. Or if it reaches lower limit, sell the middle strike price call, middle of the range, and buy another sell put and buy another put OTM. So both these strategies you can do. You are expecting Nifty to remain fluctuating between this range. All right. So you can very well do both these strategies. Ladders and ratio spreads. Now these are actually working fantastic with respect to VIX. You buy at the money call and sell two calls out of the money. Which out of the money? Outside the slightly above the upper limit. Okay, so net selling, net you are sold two lots, you have bought only one lot. So, but you are buying one lot at the money and selling two lots out of the money. These out of the money lots will give back significant quantity of premium to you. And as the stock starts going up, first you are going to make money and you are not expecting it to go above the upper limit, right? Same thing you can even do with the puts. Buy at the money put and sell two puts below the lower limit. Okay, so this is another good strategy. Or you can, instead of 1:2, you can do it 2:3 if the premiums permit that. So both the things you can do. All right. What are the advantages? Net premium paid is small. So as long as Nifty remains within the calculated range, the risk reward ratio is good. In fact, if you're bought at let us say for example, for ease of calculation, that your Nifty is at 18,000 and the limit is somewhere like 18,200. VIX calculated upper limit is 18,200. You buy one lot at 18,000, sell two lots at 18,200. Your risk is only above 18,400, which is double the range. Crossing that within the week, probability is extremely low. Margins required will be high because you are selling one extra option. But success rates are really high for such kind of strategies. You can create short straddle, you can create short strangle, you can sell call and put at the money and expect that Nifty remains within the range. Only if it starts going outside the range, then you have to book loss and exit. Other way around, short straddles you can hold, or you can sell call at the upper limit and put at the lower limit and short strangle, and your cushion is safety margin is the entire width of upper to lower limit plus whatever is the net premium received or minus whatever is the total premium received. So suppose if you have sold at the your limits are let us say 17,800 and 18,200. You have sold 17,800 put, you have sold 18,200 call, and collected premium is say 50 rupees. So your risk is only 50 points below 17,800 and 50 points above 18,200. Okay, so you can take the position in such a short triangle and sit comfortably for the week, right? About half the times upper or lower level is reached, but very less it is crossed. So short straddle is not a very good strategy because most of the time, by the time it reaches the limits, you are already in loss. Okay, so short straddle is not very advisable. Short strangle you can do. When VIX is around 20, it gives premium that almost exactly compensates the difference between current level and the limits. Very close to it. But strangle always works better than straddle when it comes to this kind of strategies in Nifty. Okay, half the time you will make money, remaining half you are likely to lose money. Probability of loss is looking like it's 50-50, but in reality you will find it doesn't usually cross the limits by a very wide margin. All right. So probability of profit is usually slightly more because you have got that extra premium by selling the options. Strangles work better than straddles, short straddles. The short strangles work better. All right. Personally, this is not a strategy of my choice because I prefer where there is higher probability of profit than 50%. So personally, I don't like short straddle at all. Short strangle is a better profit making strategy. Only news based movements. If some news is expected, then don't do it in that week. Then it's more likely to end up in losses like RBI policy, central bank policy, or inflation data, or then basically US, Indian and US data is affecting Indian markets. Then election results, budget, or those weeks don't do it, please. Okay.